Welcome to Charts View presentation. In this presentation I'm going to show you how to look for a possible bottom in a share price or index that has been in a free fall. So basically showing you when it's safe to enter the share or index. What I'm looking for is called the 123 low. That's the 123 low there. But anyway, let me just explain a bit about how to find them. If you look at this picture I've got drawn here, this is a bear market as such, or share that's actually in free fall. If you look at it, the price goes down, then it rallies a bit, then it goes down even lower, then it rallies a bit, then it goes down lower, then it rallies a bit, then it goes down lower, then it rallies a bit, then it goes down lower, then it rallies a bit, then it goes down. But this at this point here, it's not actually going lower than this point. So now it's starting to rise up. At that point there, that is your 1, 2, 3 low. That's 1, that's 2, that's 3. This signal comes here for the buy will be at this point here. So at this point, 1, 2, 3, that is your buy signal. That's telling you now it's sort of safe to enter the market possibly, but you'd have to put your stop loss below this point here when you do enter, because everything you enter should have a stop loss attached to it. Let me just show you an example of my favorite chart, how that actually looks like in real terms. This is the bear market. Oh, sorry, this is a weekly chart of the Dow Jones Industrial Average. Now, in this chart, you can see the price is grinding down, grinding down, grinding down. Keeps coming down, sort of rally, drops again, sort of rallies, and it drops, and it sort of rallies, and it drops. Now, at this point here, it's starting to rally hard. You think, oh, great. The signal hasn't come yet. Then it goes, then it rallies up to here, then it goes down. And the signal on a weekly chart was here. Bit late, I know. It's at 8,888, so you missed your 2,000 points, unfortunately. But that's because this is based on a weekly chart. If you use a daily chart, you would have entered a lot quicker than this. So obviously, you could use this on daily chart, weekly chart. Weekly chart I'm just showing you now because it's a bit more clearer to see, but you could use it on a daily chart as well. So basically, if you look at it, it's been getting lower highs, lower highs all the way through, lower again, lower high there, and it keeps dropping. Now you're looking for higher highs, and that is basically went up to this high here, then it dropped. This was the first higher high. It's because it broke above that. Now you've created a higher high as it goes all up to here, higher, then it dropped lower, then it's gone even higher. Look, it keeps getting higher, lower here. And these lows are not getting any lower than the previous lows. So it's actually rallying. So that's actually a sign of a healthy bull market. When it starts, every time it goes lower, it doesn't go lower than the previous low. That's a sign of a healthy bull market. See, it goes lower, it's not going below the low. Obviously, then you've got a correction, which is this part here has a correction. Then it carries on going higher and higher and higher. That's a bull market. As you can see, you get lower highs, lower lows, so higher lows. I get tongue twisted sometimes myself. So basically, a 1, 2, 3 low. It's basically that 1, 2, 3. That's what you're looking for. First sign that the correction has been over by getting a higher high as such. That's what you're looking for, basically a new higher high. So here the signal would have come around about here. Now if I turn this to a daily chart, zoom out, you would have got your signal a lot earlier than that. So an example, sorry for this, it's a bit slow. You would have got your signal there. There's your 1, there's your 2, that you would have got your signal here. This is at 7,500, so you're looking at nearly 1,300 points earlier. That's your first sign of a higher high. See it? So that's 1, 2, 3. Like I said, if you go back, it's just grinding lower each time. See that thing? It's just grinding lower. That's what you're looking for. You're looking for the first sign of a 1, 2, 3 low. That's what it looks for. I could also do this on another company. I'll take RIA for example. This 1, 2, 3 low is great at spotting a bottom in a market. It's probably the only way you can spot a bottom, to be honest with you. This, as you can see, this is Rio Tinto. As you can see, it's clearly getting lower highs. See, lower highs, lower highs, lower highs, lower highs, lower highs. Clearly, apart from this point here where it created a 1, 2, 3 low there, and it rallied a bit, but like I said, you put your stop loss below here. The minute it goes below this point here, then it's saying you get out again. So there was a false 1, 2, 3 low there, which you could have entered on that one. But obviously, the minute it turned below this low point here, you'd be out. But then it goes lower again, lower again. At this point here, it goes 1, then it goes sideways, then it breaks out here. So that was your signal here of a 1, 2, 3 low. That's telling you it's probably safe to go back in the market. Again, once you enter at this point here, stop losses will be below here. Below the 1, below the 2. So that'll be 1, that'll be 2, and that'll be your 3. So that is where your stop loss would be. So now you now as it starts rallying, got even higher there. So now it's telling it's sort of safe-ish to enter the market. And as you can see, goes higher, down a bit, goes higher, down a bit, goes higher, lower, and higher, and so on. As you can see, that was a great entry for 1, 2, 3 low would have been here at this point. Whenever you enter 1, 2, 3 low, make sure you put your stop loss below the 2. That's your 1, that's your 2, and that's your 3. The 3 is a signal. The signal is once it goes above this point here. That's your 1, that's your 2, and that's your 3. So this was the entry when it went above here, at this point here. That was your entry. Just gone above the peak of here. So that's basically what you're looking for. First signs of higher highs. See, the highs is grinding away now. So now you've actually found yourself a perfect 1, 2, 3 low. That basically says it's safe to get into the market. When a share is doing this, there's no point buying at all until you see a higher high form. Clearly going down, up, going down, down, down. There is no higher highs forming. Just dropping away. If you look at it, just dropping. You could have got a full signal there for 1, 2, 3 low, unfortunately. But then you won't be. You would have been out once it goes below this point anyway. So you would have made some money on that little rally there if you're trading it. Bottom line is, it keeps grinding lower. See, it keeps grinding lower. That's where people make mistakes when they chase after a share. They think, oh, this is cheap. It's only cheap once you discover a 1, 2, 3 low. Until then, price will keep going lower and lower and lower and lower. So basically, that's the one. So basically, go back to this. I'm just showing you what 1, 2, 3 low looks like. So hopefully that could help you in spotting possible bottoms in markets or shares. So clearly you can see it again. Price goes down, up, down, up, down. This is the up, down, up. That's your first higher highs. So that is what you're looking for. This is the key to actually succeeding in markets, and this is the key to succeeding in trading generally, is knowing the trend. In this case, trend is clearly down, so you won't be looking to go long at all. The only time you look to go long is once a 1, 2, 3 low has formed, the price is starting to do this, get higher highs. That's what you're looking for. Until then, you don't go long. Okay, I think I've spent too much time chatting here. So I'm just ending the presentation. But for any more information on general trading tips, go to www.chartsview.co.uk, and hopefully there'll be a lot more learning videos and educational material on there for you to learn by. Thank you. Bye bye.